Hi guys, quick update video on the market. This is Logical Orange for Sublime traders. Today we are going to take a look at the Bitcoin's price in general because we are mostly red. So Red Friday, Black Friday, mostly due to the fact that Bitcoin futures expiry due date is today, the 26th of November. Mostly red, as you can see around the chart. Looking at Bitcoin, separated the three possible big formations that we are in now. So as you can see, we have a big mirror channel coming from the past channel that we exited on the 16th of November, 15th, 16th of November. So this channel is equal in height with the previous one. Mirror channel, also confluential with multiple indicators on the 53 level, 53k level, price level. So right here, I highly expect the price, if we break out from the third formation right here that we have, so the descending channel, if we break out of this formation, we will certainly test this 53k level. And in my opinion, the price will bounce there. I will show you on the order book chart just after. A lot of orders placed there. Confluential point also. So basically we have three main formations right here: a triangle, a descending channel, and ascending channel. The ascending mirror channel holding the two others, so the two smaller formations right now. So we left the triangle. We left the triangle on the lower side. We didn't close the 4 hour yet, so we might wick out of the triangle formation and then come back up. I don't think this is a possibility right now. The third formation that we are in, so descending channel, was tested properly on the lower side, rejected for now. And I think that the price might do two things. So I'm bearish for the weekend. I was bearish for the week, and now I'm bearish for the weekend. Now we could retest once more a bit later, then come back, retest the support, and then come back. I think that this is not as possible as going out of this formation also and testing the 53k level. So 53k level doesn't matter if it's around here or here, the exact 53k level will be tested. So now let's go to the order book chart and let's check the levels that we have right now. So we have just broken the 55 that was pretty intense, had a lot of orders and a lot of stop losses placed in this level, and now we wicked up a bit, and next we will test the 54. Of course, I told you that the round numbers also are always supports induced for stop losses usually, and then we will go test the 53, which is also covered by another block of orders at 53 and 100 and something. So this level holds us pretty tight for now. If we fail that, then of course 52, 51, and the whole cluster then that we can see right here until the 50 marker. A lot of orders right here. So the selling pressure must be real in order to break all this. I honestly, worst case scenario, I don't think that we can go lower than 50. I really don't think that we can go lower than 50. I think that we will go 53, and then we will gather strengths on the bull side, and we will form something similar to this pattern right here. So with a full force on the bull side, and then just retest the previous previous supports as resistances. So previous supports would be flipped to resistances, and we would retest them on the upside. Now, as I said, highly influenced by the fact that that we have Bitcoin futures expiry today. Monday will be better because it's the settlement date, so the 29th. And next week will be less influenced by this, and we might have some good upward pointing moves starting Monday or Tuesday. So for now, this is what I wanted to show you, the three main formations. So ascending channel that holds the two secondary formation, triangle, and descending channel. So we are here, guys, right now. We will be waiting for the 53k level to be touched, and then we will be talking about longing. Shorting right here is possible, but either use your stop losses tight or manage your positions actively. This is all for today, guys. Quick update on BTC. Thank you for watching. This is Logical Orange for Sublime Traders. See you on the next one.